To Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have a live discussion of current market conditions. We'll talk about unemployment data. We'll talk about CPI data next week, tariffs, DeepSeek, and potential catalyst for the market to go up or down. And we'll review the models, in my opinion, about what is the next move in the market and what are the opportunities in the markets right now. Disclosures are important, so please read them. I left the screen here. You can pause the screen. If this is your first time, please type in first. Always want to welcome new subscribers, but I encourage you to visit this link if this is the first time you see the disclosures to understand the risk associated with trading stock or options. That I'm not a financial advisor. I'm here just to show you what I do in my own account based on my own risk tolerance level for general education. All right, let's jump into the market. We have, we started the week with tariffs, right? Mexico, Canada. So it looks like for now, at least, there is an agreement and the fear of tariffs kind of subsided. And it reflects in the price of the 10-year yield. So you can see 10-year yield moved lower to 440. It jumped to 460, dropped to 440. Now it's at 450. The way I'm thinking about the yield right now is that if the yield goes higher, right, then this is negative for the markets, right, for equity markets. And if the yield goes lower, right, then it's positive for the markets, right? And this is a line in the sand. After unemployment data today, rates ticked down a little bit, right? 4%. Hourly wages ticked up a little bit. It's viewed as net inflationary, right? Higher for longer because everybody has jobs and have money and they spend in money. Not everybody, but average, right? Based on those surveys and data. So then inflation. So right now we're kind of in the middle. We're not sure what to do. And that's also reflected in the price of the equity. We're close to all-time high on spiders, right? We're close to all-time high. We were there once, twice, 3 times, 4 times. Markets have hard time breaking above 610 level. So, and we're in February. For that reason, I think we're trading most likely in some kind of a range right now, right? We're trading in a range between 610 and let's call it year-to-date low 575, right? So we're trading in this range. So at some point, market will break to the upside, right? And we'll make new highs. Let's call it 620 is the next level of overhead resistance, 620, 630, right? Or it can continue to trade range bound, right? Scenario number 1, we're making new all-time high. Scenario number 2, we're just trading in the range, right? Because still, in terms of tariffs, there is uncertainty. Earnings season is over, so what's the next catalyst, right? We have unemployment data. Well, next catalyst is inflation data, right? And again, if inflation is as expected, then maybe we trade sideways. If inflation ticks down significantly, then the market continue to rally. Or if it ticks up, right, due to tariffs or due to other inflationary pressures, then scenario number 3. So you have 3 scenarios based on the expected move, right? You can look at the expected move. Let's look at actually. There's different ways to do this. You can use stock for. Let's look stock forecast toolbox. One model. Basically, our prediction based on our model that February will trade between 620 and 576. I agree with that model. You can also look at the implied volatility, options data, basically telling you that if you look in the February and March, right? Again, 620 is the large position, kind of matches the AI model that we have, and on the downside, it says 590, right? 590. So somewhere between 620 to 630, or 585, 595. Right, so those are the 2 different scenarios based on open close interest. You can also look at research tab, right? What does research tab says? Probability calculator for spiders. 595 to 615. So whether you look at the historical volatility or implied volatility, or you look at the AI model, basically it's a distribution of possible outcomes, and the market based could be at 620, in Q1, or it could be at 585, 580. So as an investor or as a trader, it's very important to go through these different scenarios, right? And kind of, if you're bullish on the market and you think it's going to go, scenario number one, you want to determine your stop levels and with your cash allocation, right? Then your cash, you start using your cash to buy. If you think market is going to trade sideways, then you want a market neutral portfolio, right? Your portfolio beta should go down, your portfolio delta should be neutral. Maybe for one of the long positions, you have short positions. And if you're aggressively bearish, then this is where you want to, the market is overbought. This is where you want to start adding to your hedges. So let's go to this exercise. How many of you think that we're going to move at least one standard deviation, in January and in February and March, and get to 620, 630 level? How many of you think no, tariffs are still here, earnings are over, what is the next catalyst in the market? We're just going to trade sideways. Okay, so then you say 2. And then if you think that the market is vulnerable for pullback, maybe some recessionary pressures, maybe some inflation ticks up, then scenario number 3. Scenario number 3, Osama, 3 bearish. Okay, thank you for participating. Andre, BJ, George, Michael, Steve, Joseph, Kevin, Mark, Raquel, Tim. All right, so 2s, 3. Okay, this is good. So trading is about distribution of possible outcomes, right? So if you go back to your statistics class, right, if this is a probability, right, if this axis is the probability, right, and these are the stock level, right, the price, right, then majority of us says 2, which makes sense. We have, outliers that think we're going to move one standard deviation to the upside. We have outliers that think one standard deviation to the downside, but that's the distribution of possible outcomes, right? So that's, and I agree, I'm going to put 2. I think we're still, I'm not sure what the next catalyst is. So for that reason, I think we continue to trade sideways, right? We continue to trade sideways. So that's, yeah. So every time we approach in 610, right? But today we were at, what's the high? 608, right? We got 608. I looked at the stock forecast toolbox for today. This is 6 months. Let's do it 10 days. Model basically said 607 is when you're consider maybe trimming your position, and 602 consider maybe adding to your position, right? And we were at 608, right, and got rejected, right? And we were at 603, and we bounced back. So these are the markers for you to consider going long or short. And again, this is close to 1%, right? 0.5%, right? The difference between the high and low. So if you consistently buying at the predicted high, or you consistently selling at predicted low, even if you're not day trading, right? You're just opening position, then just consider to use this to help you determine the buy and sell entry points, right? If you can save even 0.5% on entry, 0.5% on exit, that could accumulate over a long period of time, right? And for the next 10 days, it basically tells you the same picture. 6.7, 6.010, try to maybe reduce your exposure to the market. 5.92, 5.95, maybe try to add to your exposure in the market. So that's how I would use stock forecast toolbox. A lot of people basically open up support ticket and says, Vlad, on February 21st, you said the market is going to close at 605, right? And it didn't. Why? Again, this is just a model to give you kind of a guidance of what the high, at which levels you sell, at which levels you short, and what does the model think is the trend right now. And it shows you short term, we're in downtrend. I would, short term market is overbought basically, and you want to maybe reduce your position. But if your outlook is, let's say, next couple months, it still shows you, slightly positive trend, 4.5%. So it is possible that, in the positive scenario, we could be at 620 or even 640 by April, right? Going into the next earnings season, if all the stars align, we could be at 620, 645, right? That one standard deviation move. And the model is bullish, right? The vector is bullish. So the uptrend is still intact. And that's what the model telling you, right? Also, in terms of signals, right? So these are the research tools, right? We have, historical volatility, one standard deviation, our model opinion on the S&P trend right now, right? We basically say in short term, maybe a little bit more higher, long term, probably just trading sideways, right? Mixed signals, 5 out of 10. And what the key support and resistance levels. Also seasonal chart, right? From seasonality point of view, usually February is volatile, right? You can go up, down, right? Trade sideways. And the rally from seasonality point of view usually starts March, April, May. This is when the rally starts and continues in the bull year, assuming the bull market is still in trend, is still intact. So that's seasonal chart. Some of the signals, I get them from active trader. So we have 3 different models: active trader, weekly trader, and monthly trader. Right? Let me just log out this for a second and log in with the right account. Right, so you can see that we have active trader, weekly trader, and monthly trader. So if you're looking for signals, depending on your time horizon, like if you hold position for a couple of months, you look at monthly trader, hold a position for a couple of weeks, weekly trader, hold the position for a couple of days, active trader. So in active trader today, I used the signal actually from Wednesday, right? So Cisco and F5. I wanted to have exposure in technology. I looked at the most recent signals and I see Cisco going into the earnings, breaking out, right? F5 after the earnings, breaking out. If you want to have exposure in technology, then this is where I can go into, if you can go into elite circle. And basically, I decided I closed PNC. This is another shorter term signal from last week, and then I'm opening PNC, Cisco, right? So it's a combination of stock and option trade. So these are all the orders from today. You have a combination in elite circle. You can see Cisco trade. This comes from active trader, weekly trader. These are the signals. I don't trade all the signals, right? But these are the AI signals that you can use on daily basis or weekly basis to construct your portfolio, right? Or to rebalance your portfolio. And then if you want to see what I actually trade, then you would go into elite circle and you would look at the orders and positions that I have. Today, so I closed PNC, opened Cisco, and I'm trading Amazon, right? Trading Amazon options, right? This is an example of options trades. So that would be the most recent orders and positions, and you have exposure to this real time, right? You can enter your phone number and get SMS messages. You can participate in live trading room, or you can watch the recordings of the live trading room. So that's elite circle, which can give you these signals. And again, this is a combination of stock and option trades, pretty active. If you just want stock, then you would go to Robo Investor. That's another portfolio where you can get SMS messages and email every time I trade. Or you can go to premium portfolio. This is one spread idea a week. So you can go to premium portfolio or spread trader, or if you just want to follow my trades and you don't need signals, then shadow trader. So those are different signals and subscriptions that we have on Yellow Tunnel, on Tradespoon. We do have newsletters. So we have a market commentary every Monday. We have a video commentary, 5-minute video every Tuesday. And then every Thursday, we have a Robo Street. So you have free content ideas. I encourage you to add info at tradespoon.com, so you get these emails with our market commentary, with our blogs and video blogs. We have a lot of getting started guide. We have a learning center, right? You can look at our videos and content on technical analysis, options, portfolio management, money management. So a lot of different topics, free content that I encourage you to review. And guides, right? Different trading guides for short-term trading, longer-term trading, manuals for stock forecast toolbox, seasonal chart, probability calculator. What else? And we have YouTube channel. So every Wednesday, if you want to see the live trading room, then you can sign up on the YouTube channel. Please hit subscribe. We're trying to grow our audience. Hit subscribe button, and then every Wednesday we have a live trading broadcast. Any questions? Tim, Rick, welcome back. We have a lot of people. So some of the opportunities, I think banks are still, right? The question was like some of the opportunities. I mean, first of all, you can find them here, right? You can go to Stock Forecast Toolbox. This is also a pretty useful tool. You can go to Company Screener, Company Finder, and actually see which sectors are trending higher, right? Like banking, right? As long as this gets calculated once a month. So the long-term predictions, like on Stock Forecast Toolbox 6 months, this or Company Screener, it gets updated only on the first of each month, and basically says for the months of February, on February 1st, here's the list of sectors that we think, basically on our model, are in strong uptrend. So you have banks, right? Probably the highest sector. Some of the insurance, some of the internet companies like Meta is also in that bucket. And then you can drill into banking and actually see, different banks, which one. So BK stands out, Citigroup stands out. So then, Citigroup is actually one of my positions. So you can see it in strong uptrend, right? In strong uptrend. So banks are doing well. I think, we had signals this week on credit cards like Visa, MasterCard, Discover Financial, Capital One Financial. So people are spending money. So you can see it's in a strong uptrend. Not a lot of signals, but I just watched that. I mean, Jets airline still ticking up. So consumers healthy, spending money, and airlines continue to grind higher. This year, maybe healthcare is the place to one of the better performing sector this year. Continues to grow and higher. Gold and silver continues to go higher, and gold continues to make new highs. So still concerning. You can see spiders are actually turning negative, kind of a sharp pullback, basically saying that these levels extent gets rejected, right? And we're back to the 50-day moving average. Tim, what does the weekly service provide? Provides signals. So just like active trader, if you go to weekly trader, this is part of this tools, like let's say for this week, it basically, based on the model, it says if you want to hold position for a couple of weeks or even a couple of months, Meta, right? So Meta is in strong uptrend. The signal gets generated on February 3rd. So on February 3rd, you come in, and if you want to have exposure on February, to Meta, you buy it, right? These are suggested entry price, right? And then you exit at these levels. For weekly power trader, you can see the stop losses 2.5%, right? So 2.5%. Gain is also 2.5%. And the model suggests to split your trade into two, right? For improvement of your for risk management. And in general, when you start, suggestion is to with 4 active positions at a time, maximum exposure of 2.5% per position. So you start with 4 positions, you risk 2.5%. If you don't like short-term aggressive trader, like every week, then these are the signals. So Meta this week, Starbucks, and Bank of America, right? So if you don't have exposure to banks, then maybe Bank of America or Citigroup. If you don't have exposure to some of the Magnificent Seven, stocks, okay, Meta. If you don't have exposure to some of the Retail stocks, okay, Starbucks, right? And it gives you specific entry and exit. And if you want to hedge or leverage your account, you can also do it with options. But the entry and exit are still based off of, if you're doing meta, then you just buy either weekly or you can buy monthly options depending on your time horizon. And instead of risking $675, you basically buy an option for $14.20. But in terms of stop loss, it's still 2.5% of the stock, right? So that's about $15. Big market drop. I mean, market did reverse. Friday has been volatile. We had some news. What are some of the news from today? It just started happening as we speak, right? So, I mean, I don't know if Bauman said something. I mean, we had Neil Kashihari this morning, or maybe some of the news on the tariffs, but a lot of it is technical, right? 610 has been a strong overhead resistance. So if the market cannot make go higher, then it uses any news to pull back. And we've seen that last Friday, right? We've seen it here. Friday before that, looks like Friday is the time to trim your positions if the market is overbought. Any questions? And it reacts to interest rates. So I would look at, 10-year yield. I don't see a big move in 10-year yield, but you can see small caps are rolling over, regional banks are rolling over. So this is interest rate play. But semiconductors and SPYs are no different. Any other questions? All right, 9:58. So I do have to leave at 10. Any other questions before we kind of move on? So we talked about opportunities in the market. Let's maybe look at let's sum up the sectors that are doing well. Materials, still weak, right? So materials are still weak. Home builders are still weak. Metals and miners are still weak. China, no new signal, trading sideways. Industrials looks better, right? But still 3 weeks of lower lows and lower highs, indicating that market overbought. Junk bonds are stable. They recovered after the sell-off. Healthcare is one of the better performing stocks. You can see volume accelerating, continue to make new highs. Consumer discretionary is relatively strong. Transportation had a nice recovery this week, Jets Airlines. What else? QQQ, had a strong week, close to all-time high. Semiconductors had a decent rebound. Value stocks in general, not going anywhere, but not going lower, so kind of trading sideways. Consumer staples, one of the better sectors this year, also had another long green candlestick. Spiders, nice recovery after the sell-off last Friday. Banks doing better, new highs. Regional banks had a nice recovery. Let's see what else. Small caps recovered this week. Energy is stabilized, right? It looks like a green candlestick this week, but had a pretty sharp pullback. How's our Magnificent Seven? Apple not going anywhere after the earnings. Meta is probably the best Magnificent Seven stocks. Continues to grind higher. Tesla pulled back after their earnings. Nvidia stabilized after last week. DeepSeek and Amazon is down after the earnings, but kind of trading sideways. Google is down after the earnings significantly. So Google looks like breaking down below 190 level. Any other questions? Right, if there are no other questions, that's all I have for today. Sorry I was late. Thank you very much. And I hope to see you in the live training room on Wednesday. Take advantage of that YouTube channel and participate. and I can answer any other questions you have. Joseph, I got in. Baba, China, I don't know. I'm staying away from China, right? A lot of a geopolitical risk, but this looks constructive, right? The pattern does look constructive. So if you entered in January, it's a nice rally. I mean, I think their earnings are coming up, right? There was an uncertainty about the earnings. You might want to hedge your position or trim, but it does look better than China, right? It does look better than China. Actually, looks similar to China. If you look at the FX side, it's overbought, right? It's not new signal. So we probably need to get above 34 to generate new signal. So here I would consider trimming, right? Especially if you entered in January, this is a nice rally. So you might want to trim your position. Thank you, Asama. Thank you, guys. Take care.